Welcome to this presentation on GST. Today we will be discussing the provisions regarding levy of GST, composition, exemptions and remissions. Before we proceed, let us analyze what is the taxable event in GST so that we know on what we have to pay tax. GST is a destination-based tax as opposed to excise, VAT, service tax, etc. which are taxed at the source. Manufacture, completion of service, transfer of property in goods, etc. are very familiar terms which denote taxable events in our existing tax laws. Supply of goods and/or services will be the taxable event in GST. Please go through my presentation on meaning of supply to know what is a supply and what is not. Now, let us go through the levy of GST. Article 265 of the Constitution of India mandates that tax cannot be levied except by the authority of law. Hence, for every taxing law, charging section is a must. Article 246A was inserted by Constitution 101st Amendment Act, which empowered the states and union to levy GST. By virtue of these powers, subsection 1 of section 4 of the IGST Act levies IGST on interstate supplies. Section 3 of IGST Act defines interstate supply as a supply where the location of the supplier and the place of supply are in different states. Rate of IGST will be the sum total of CGST and SGST rates. IGST will be appropriated by the center and the destination state depending upon the place of supply. Now, let us go through the provisions of CGST and SGST Acts. Subsection 1 of Section 7 of the CGST and SGST Acts levy CGST and SGST on all intrastate supplies. Intrastate supply has been defined in Section 3A of the IGST Act. It states that intrastate supply means any supply where the location of supplier and the place of supply are in the same state. CGST and SGST are payable on intrastate supplies without cascading. That is, both CGST and SGST are calculated on the same transaction value. The CGST portion is for the central government and SGST is for the state government. Please go through my presentation on value of supply to know more about the value on which these taxes are payable. It may be noted that both Section 3 and 3A are subject to Section 5 and 6 of IGST Act, which defines the place of supply of goods and services respectively. Please go through my presentation on place of supply to know further details. Now, let us discuss reverse charge mechanism. The levy of GST on supply, as detailed above, is in the hands of the supplier. GST is also payable under reverse charge mechanism by the receiver. Let's go through what it is. This mechanism is conceived by the governments for collection of tax from various unorganized sectors. Under this system, tax is paid by the recipient on inward supplies. Credit of tax paid can be taken by him for paying tax on his outward supplies. Conditions for imposing tax under RCM is provided in subsection 3, section 4 of the IGST Act and subsection 3, section 7 of CGST and SGST Acts. It is mandatory for the purpose of levying tax under RCM that the categories of supply be recommended by GST Council and notification is issued by the respective government. Let us now find out who should pay the tax and when. The liability to pay the tax levied under Section 4 of IGST and Section 7 of CGST and SGST Acts shall arise at the time of supply. To know more about time of supply of goods and services, please go through my presentation on time of supply. The charging sections specify the manner of collection of tax shall be as prescribed and tax shall be paid by every taxable person. So, we should know the meaning of taxable person because it is the taxable person who is liable to pay tax, obtain registration and file returns. But before that, let us find out the meaning of aggregate turnover. Subsection 6 of Section 2 defines aggregate turnover. It means the aggregate value of all taxable supplies, non-taxable supplies, exempt supplies and export of goods and or services of a person on all India basis under the same PAN. However, aggregate turnover does not include taxes charged under the CGST, SGST or IGST Acts, value of supplies on which tax is levied on RCM, Value of inward supplies. The aggregate turnover of a person determines the threshold limit for the purpose of registration, eligibility for composition scheme, etc., which in turn decides whether the person is a taxable person or not. Taxable person. Section 9 of CGST and SGST Acts define taxable person. Under Section 9 subsection 1, taxable person means a person who carries on any business at any place in India and who is registered or required to be registered under Schedule 3. Under subsection 2 of Section 9, central and state governments, local authorities, etc. are included unless they carry out a supply which is exempt under Schedule 4. Now, let us go through the category of persons who are required to be registered as given in Schedule 3. Every supplier shall be liable to be registered in the state from where he makes a taxable supply of goods and or services if his aggregate turnover, including all supplies whether on his own account or as an agent, in a financial year exceeds Rs 19 lakhs. This limit is 9 lakhs for Northeast states and Sikkim. Such registration is needed unless he deals exclusively with non-taxable goods or services. The supply of goods after completion of job work by a registered job worker is treated as the supply of goods by the principal, and the value of such goods is not included in the aggregate turnover of the registered job worker. Next category is that of all existing registered persons. Thirdly, the transferee or successor if a business is transferred. Fourthly, the transferee in cases of amalgamations and demergers. Lastly, Schedule 3 also includes the following 11 categories of persons who are included irrespective of their turnover. Persons making any interstate taxable supply. Casual taxable persons. Casual taxable person has been defined in subsection 21 of section 2. It means a person who occasionally undertakes transactions in a taxable territory where he has no fixed place of business. Persons who are required to pay tax under reverse charge mechanism. Non-resident taxable persons. A taxable person residing outside India and coming to India to occasionally undertake transactions in the country but has no fixed place of business in India is a non-resident taxable person in terms of section 2, subsection 69. Persons who are required to deduct tax under section 37. This would include department or establishment of central or state government, local authority, government agency, and other notified persons. Persons who supply goods or services on behalf of other registered taxable persons, whether as an agent or otherwise. Input service distributors. Under section 2, subsection 56, an office of the supplier of goods and or services which receives tax invoices towards receipt of input services and distributes the tax credits to suppliers having same PAN as that of itself is called an input service distributor. Persons who supply goods and or services other than branded services through electronic commerce operators. Every electronic commerce operator. Under section 43B, subsection E, any person who directly or indirectly owns or operates or manages an e-platform that is engaged in enabling the supply of goods and or services or information. It does not include a person supplying on their own behalf. An aggregator who supplies services under his brand name or trade name. And lastly, such other person or class of persons as may be notified. There are some categories of persons who are specifically excluded from the definition of taxable person. Under first proviso of subsection 1 of section 9, an agriculturist. Under second proviso of subsection 1 of section 9, persons who are required to be registered as they have crossed the threshold limits of registration, but their turnover is yet below the threshold limit for payment of tax. The threshold limit for payment of tax has been reportedly revised to 10 lakhs for 7 northeastern states and Sikkim and Rs 20 lakhs for rest of India as per the decision of the GST Council taken on 23rd September 2016. Under subsection 3A of section 9, services of employee to his employer. It may be noted that reverse of this relationship is not exempted. Under subsection 3b of section 9, person who exclusively deals in non-taxable goods or services. Under subsection 3c of section 9, services for personal use exceeding the threshold limit to be prescribed. Composition levy. Closely related to the topic of levy of GST is the composition levy. Composition levy is covered under section 8 of CGST and SGST Acts. Features of this scheme are: this scheme is optional to the taxable person. Taxable person shall make an application exercising his option. The permission would be valid till the person is eligible unless cancelled before that. If a taxable person was not eligible for opting or his permission was incorrectly granted, then the proper officer may cancel the permission and demand a differential tax and penalty equivalent to the tax. All the units under the same PAN should opt for composition. The scheme is applicable to both goods and services. Aggregate turnover shall not exceed Rs 50 lakhs. Minimum GST rate shall be 1%. The scheme is subject to subsection 3 of section 7. Therefore, the taxable person will be liable to pay taxes for RCM supplies at regular rates. He should not collect GST and no tax invoice can be issued by him. He shall not take credit of GST, and additional conditions may be prescribed by rules. Let us now discuss about the power of central and state governments to grant exemptions from payment of taxes. The relevant provisions are contained in section 10 of the CGST and SGST Acts. The exemption can be granted in public interest on the recommendation of the GST Council by notification, either absolutely or subject to conditions, goods and or services of any specified description from the whole or any part of the tax, or by special order exempt from payment of tax under circumstances of an exceptional nature any goods and or services. When an exemption is granted absolutely for whole of the tax, the taxable person providing such goods and or services shall not pay the tax. This will also prevent him from claiming input tax credits on such supplies. Government may issue a retrospective explanation within a period of 1 year to provide more clarity. Section 11 deals with remission of tax on supplies found deficient in quality by prescribing rules in this regard. Remission means relieving the taxpayer from obligation to pay tax on goods. Question of remission arises after the supply is made but before the same has been accepted by the recipient. It is provided that cause of deficiency should only be natural causes. Maximum limit in percentage may be fixed by rules. Even if the supplier has received the value towards the deficient goods, still waiver of tax will be applicable under remission. What we have been discussing in this video is not yet the law of the land. In order to engage with the stakeholders, government has made available the draft model laws on GST in the public domain on 14th June 2016. The link is available in www.mygov.in. Do provide your suggestions and comments on the model GST law to the government. Your suggestions will go a long way in making the law vibrant, taxpayer-friendly and easy to administer and free of litigations. Thank you very much for a patient hearing of this presentation. Do like the video to encourage. Do subscribe to my channel to stay updated on the happenings in GST. Thank you once again. Have a nice time.